invest your UK money here in UK or back in India? I ran the numbers. Currently, £1 is about 125 rupees, whereas in the year 2000, about 25 years ago, £1 was 68 rupees. So I ran the numbers investing £1,000 here in the UK versus investing in India over this 25-year term, and the results truly shocked me. So £1,000 back in 2020 was 68,000 rupees, and India has stronger returns between 12 and 15% in just mutual funds in India. So that invested at 12% for 25 years is just under 14 lakh rupees. And if we converted the 14 lakh rupees back to the UK in today's exchange rate, where £1 is 125 rupees, we get about £11,300. Whereas if we invested £1,000 here in the UK in just a globally diversified fund at 7%, in 25 years, that would have returned just over £5,500. So that's only half the returns that you would get here in the UK, despite the currency market volatility. I know these numbers and things can be quite confusing. If you want a proper breakdown of all the numbers that I've used, I'll put a link in the description box below. Feel free to check it out. But before you rush and move all your investments back to India, there are certain other things that you need to be aware of. First is a tax headache. With the new FEMA rules, all the investment returns that you have in India has to be reported to HMRC. They sort of have an interlink between the two systems these days. So if you don't report it directly, the government's exchanges this information, so you will get into trouble with HMRC. So you definitely need an accountant in India to help you with your tax return. And depending on how able you are to do it, you may need a tax consultant here in the UK as well to help you with this tax returns. So that's adding on further costs to your investment. Next is the taxes in India. So for any capital gains in India, you're taxed between 10 and 20% depending on how long you've held the share of the fund. Whereas investing in the UK and within the generous tax allowances, you can use your ISA and your pension, so you avoid these tax charges. So it's further minimizing the costs. Third is the RBI rules on moving money out of India. So the cap of how much you're able to transfer out of India depends on if you have an NRE or NRO account. But the RBI is quite strict about these rules. So that's adding further friction to your investments in India. Also, the complexity of the situation. Say you leave behind a spouse who's not very familiar with all the processes of transferring money there and back, etc. If something were to happen to you, you're leaving a vulnerable spouse who's not really grieving for you, but also having to deal with these complex situations. The RBI rules, the international tax reporting, the money exchange, and I don't know what else, the complexity of transferring money from India and back. So the bottom line is only you can decide whether the hassle of transferring money to India and back is worth the higher returns that you will get from transferring money to India. But there is another option of investing in Indian funds here in the UK using your ISA and even your pension allowance. I've done a whole video on that. Feel free to check it out. I'll see you in the next video.